Hello again and welcome. This is Robert Schein, Managing Director, Partner at Blanke Schein Wealth Management. Thank you for joining us for our market insights and observations. This is Thursday, May 9th of 2024. We're going to discuss three topics markets are paying attention to that are moving markets as well as a result. So you should be too. So thanks for watching and let's get right down to the top three of the day. So let's talk about the three of the day. The first out of the gate is the consumer spending data, which actually showed signs of picking up in April. April traditionally is you basically put money aside for taxes and you take care of your taxes. And after that, if there's dust that settles and there's sort of more money, that you thought, and you go out and start spending, at least that's what the consumer behavior has been. The evidence is there. Also, the lower income card spending growth is stronger than both the middle and higher. And for consumers in April, total cards, let me read this to you. Total card spending per household year over year growth by income. Essentially, there's a lot more being put on credit cards, and that could be the key here moving forward because we got 21 to 27% on sort of the interest on your credit cards. And as those, even though spending is helping the economy move forward, that's positive because 2/3 of the U.S. economy are basically fueled by the U.S. consumer. At the same time, that spending can't continue. So where do they put it? They put it on a credit card. Interest is extremely high now. That will potentially slow the consumer, i.e. slowing corporate earnings. So we could see if that trend continues, we got to pay attention to it. That's what we're talking about, the consumer spending data. So it's a front end look. We're also talking about gold. It's interesting, both here and abroad, this last quarter was the most all-time record that central banks netted purchases for gold. And it's not just here, it's also Turkey, China, India basically are on track for a record year. Now, why would a central bank do that? It's an inflation hedge. They're worried that at the end of the day that the inflation is still rooted. So now we're waiting to see how all this plays out. We've got a strong economy, you've got strong market, stock market, real estate markets. The prices are up even though there's more inventory as of late. And then the consumer is hanging in there. So we're going to pay attention to the jobless claims also came in a little bit, worse than anticipated since back in August of 2023 was basically the second largest print. That just means more people are looking and filing for unemployment. Ultimately, that's what the Federal Reserve actually wants to see. They're not saying it out loud, but they want to see that JOLTS number, that job gap number come down. So basically, bad news is good news for if you're looking for rate cuts later this summer or even early fall. And that's why the market today conceivably is up as we're filming this right now. And the last topic of the day, we're looking at earnings and we're always keeping a close eye on earnings. If you take out the Magnificent Seven, so the seven largest sort of tech companies, if you will, and take that from the S&P 500, we've got a chart for you. We're showing that a lot of the earnings growth is still coming, if not all of it's coming from the Magnificent Seven. And that's interesting because, the rest of, there are sectors that are in the positive, there are sectors that are in the negative, but technology still keeps driving. And that's why we're maintaining an overweight in that section because there is now the AI revolution for every corporation. The CapEx spending, that's extra money you're going to spend into the future, basically to reinvest in your business, to basically be quicker, faster, and stronger than your competitor. And you can't be left behind because you have to basically keep buying chips and cloud storage and data centers and electricity. And that's really what's contributing at the end of the day to why those Magnificent Seven are still going is because, one firm's CapEx, what they're spending, the rest of the S&P 500 or every company, if you will, is another firm's sort of cash flow or firm revenue at the end of the day. And that's, again, the technology piece. So we pay attention to that. It's very important. But it's also equally to note that, how it's being fueled. And it's going to be fueled for quite some time because I think we're just at the very beginning of this evolution that we're seeing play out in the AI space and the race for quicker, faster, stronger for all these companies. So that's our update for today. Thanks for watching and like and subscribe and share with friends and family. Take care.